All right, everyone. So in today's episode, I'm going to break down for you the pre-market break of VWAP setup. This was the setup that today gave me my biggest winner, and it was on MGOL. This is a stock that is actually a continuation setup from the move that began yesterday. Squeezes up yesterday, holds those levels after hours. Pre-market, we get that continuation, and we get that push higher. So today, we hit a new high over the last 2 days on MGOL, which was certainly good to see. The float on this one, 737,000 shares. It's a very low float stock. It's one that we have traded in the past. I'll pull up the chart so you can see. This is my last day of trading on the traveling trading station here. I've been on an island off the coast of New England for the last week, and it's been really nice. But I'll be looking forward to being back home on Monday. And I'll be back home for my weekly game plan episode that I'll upload Sunday night. So here's MGOL. We'll go 5-minute chart, full screen. And you can see yesterday, you guys ended up getting a really nice move on this around, it was like 10:30, 11. It goes from 3 all the way to 6. You got a 100% move. And I missed it completely. I didn't even trade it because yesterday was a small green day for me, and I locked it up on the earlier side, and then I didn't want to overstay my welcome, so ended up completely missing that move. But nonetheless, good job for those of you guys that hit it. It pulls back, it comes back up, and this is kind of interesting price action right here, because if you recall from yesterday's episode, I talked about how sometimes towards the end of a hot streak, we'll start, seeing stocks that are going up 50 or 100% and then coming all the way back down. So this went from $3 up to 6 and then all the way back down to 350, which is a huge retracement. Typically, I would not be happy with that kind of pullback because it's, for me, the way I think about it is I like to see stocks that are holding usually in the top 75 to 80% of their range. So that would be sort of up in this area here. And if this is the range from the beginning of the move, I want to see it holding in the top, kind of 20% here. So when a stock pulls back to the 50% retracement, that's kind of the bare minimum, or not the bare minimum, that's the most that I'm kind of comfortable with before I'm just like, it's too weak. There's just too many sellers. Now we actually have a new scan that we just released today. It's top of trend right down here. And this is a scan that is looking at stocks that are currently positioned in the top 80% of their range and that have also met our criteria for volatility today. So these could be some interesting ideas for watching continuation. As it turns out today, most of the stocks that are on this scan are a little bit higher float, so they're not really kind of what I would go for on this particular day. But I think one of the issues we also have today is that it's Friday, it's the end of the week, and it's a Friday in August. This isn't usually a time where we see really strong momentum. So my thought, even yesterday, was that the odds of me having a big winner today were pretty low. And that my next best chance of having a really good trade is probably not till Monday, Tuesday, Wednesday of next week. So anyways, so yesterday MGOL gives us this nice move, but then it retraces like 70% of the move. That's too much. Then it bounces all the way back up to volume weighted average price, but then it fades again going into the close. And then after hours, kind of out of nowhere, on noticeably light volume, it pops back up to 5, pulls back, and goes all the way back up to 550. I find the volume here very interesting because it took only that amount of volume to send this from $4 back to 550, whereas in this area, you had a lot more volume, but the move was smaller. And that tells me during this period of time, there were a lot more sellers selling into that move, selling into VWAP, and then of course it faded off that level. So this was not a sustained move. But then after hours on light volume, all of a sudden, I don't know, shorts caught off guard, or they were just not there selling the stock, and you get that nice move. So it pops up there, pulls back, squeezes up to 550. So when I sat down this morning at about 6:30 here, I saw that MGOL already had a couple levels in place. So I drew these two descending resistance lines. One that connected right here, and that kind of touched right about here, and another that touched the high of this candle from after hours. So those were the two levels that I drew, and those have been drawn since like 6:30 in the morning. I sat down, and when I first sat down, the scan had two other stocks that were interesting. The leading percentage gainer was ITI. This is a stock that I looked at it on my phone and I was like, well, it's a 39 million share float, but it is up 63%. Let's take a look. And I quickly saw that it's a buyout. So the stock has been acquired by another company. It's going to trade sideways. Its value has been determined. So that's out of play. The next one down was KIT, K-I-T-T. And KIT has pulled back a good bit here, so it's not still at the top of the scan. But when I sat down at about 7, KIT had made this move pre-market. It had pulled back, and then it's coming back up right here. And this was actually the stock I took my first trade on. So what I did on KIT, if we pull this back down to the 1-minute chart, I'll show you my first trade of the day here, because this was also a break of VWAP setup. So KIT squeezes up here from 4:30 up to 5:30. That is front side of the move. That's when it was the cleanest. Then it pulls back to VWAP, breaks VWAP, comes back up, sells off, back to VWAP, fades off it, then comes back up right here. And so as it broke back over VWAP right here, we then sort of pull back and retest it, as you can see. I got in right there. And I bought, my first trade on this one was, let's see, I bought at 305. So we broke over 3. We held support at 3, and I was like, okay, here we go. So I'm adding at 305. I add at 310 and 311. And then you know what ends up happening? If we zoom in on this chart, you'll see that it hits a high here of 314, and then it stalls out. It drops back down, and it breaks 3, and I stopped out. First trade of the day, a $600 loss. Here's my P&L for the day, by the way. $668.11. That was my first trade of the day in the red. All right, so that's not great, but it's still early, so not too bad. It's still lots of time to recover, and of course I did. So it pulls back here to about 290. It then comes back up, but I was like, you know what? This stock is, I don't think it's trustworthy. It's too choppy. It's too thickly traded. And I'm glad I avoided it. It pops up and then it flushes again even more dramatically on higher volume. So at that point, I was like, all right, this was a break of VWAP setup. And what I wanted to see happen is that once we held over VWAP, I wanted to see that we started squeezing back to the pre-market high. That's the target. And my stop is if we go back below VWAP. And I moved the stop a little bit tighter right at $3 because I thought if we break below the whole dollar psychological support, that's not going to be good either. So I kept a tight stop on it, but it just was not able to move higher. Now, one challenge with the break of VWAP setup is that it inherently requires the stock to have gone below VWAP, right? So here we're above VWAP, and then we come down to it, which isn't great, and then we break VWAP, that's bad. Then we sell off even more, that's not good. Now we do sometimes see these breaks and this big squeeze back up, but the reason that happens, that you get the big squeeze, is because shorts usually get confident when a stock is holding below VWAP. They're holding it below VWAP, they're selling against this level, they're looking for the fade, and so they don't expect it to rip back up. This has already shown early weakness, and during a time that it really shouldn't have weakness. Also note the float's 1.3 million shares. KIT currently has, let's see, 22 million shares of volume. It's up 22%. So, you know, it really shouldn't have been so difficult to trade, but it was. There was a headline out. I don't know if it was a super significant headline, but there was some news out on it. It's not a Chinese company, you know, it's just something kind of pay attention to. So, you know, it's a robotics developer, Ocean Robots, but also cloud software. They make candy bars too. This company does everything. Services delivered in modern business model to the ocean industry. Okay. So anyways, you know, so we had this headline, but it just didn't feel like it just wasn't moving cleanly. It was just too difficult to trade. So pretty much after that trade, I was like, KIT is dead to me. This stock is not one that I'm going to look at for the rest of the day. It's over. This is just too weak. And so rather than over trading it and struggling to try to recoup my 600, I just said, you know what? I'm not going to throw good money after bad. I'm going to just cut my loss on Kit, move on to something else. So the second stock that I had on watch on my side chart was MGOL. And MGOL, I had seen they had made this big move yesterday. The only thing is it wasn't gapping up a lot, because if we look at yesterday's close, we closed at about 380, and pre-market right in this area, we're at like 440. So we're only up like 10%. It's not a big gapper. So because it's not a big gapper, I didn't really notice it initially. But then, I did see it. So I see, of course, that's got this big move. And right here, as it comes up, I'm like, okay, break a VWAP setup. And I thought this one, as I saw it squeezing up, had more potential to me. And here's the reason. Number one, the price is a little higher than Kit, which is good because a lot of these stocks will trade in, they'll kind of move in like 10% kind of blocks, like sort of jumps 10%, then it pulls back, then another 10%. 10% on a $5 stock is 50 cents. 10% on a $2 stock is 20, 30 cents. So, excuse me. So for that reason, I thought it had potential for a bigger cents per share move. And I knew I was still going to be taking the same share size. So as it starts to pop up right here, I jumped in right on that micro pullback for the break of VWAP. And it was like just perfect timing. Jump in, it breaks VWAP, squeeze, and this is also right at 7 a.m. 7 a.m., top of the hour. This is when a lot of retail traders come online. So all of a sudden it's popping up, I'm adding, and I'm riding this momentum. It goes from VWAP here, which was right around 470, and it goes all the way up to 5. It pulls back, it goes up to 520, 530, 540. Another pullback up to 550, 560, flushes, back up, flushes, struggles here, and then it drops. This ended up being the high of that little area, 560. Now, if I back this up for 1 second, I'll just draw on this chart. So first of all, we sort of had this level like right in here, right? And we did kind of come right into it around 5, and I was a little worried about that. And then we also had the next level. Oops, sorry. So then the next level was, I'll have to remove this, but it's up here a little higher. It was right around here, right? So I was like, okay, we're over it, but we're under it. We're kind of struggling right at this level. It wasn't super clean. So because we had this first resistance level, I was like, I better take profit. So I took some profit, and then it holds that level, and I'm like, okay, I'm going to add back, and it squeezes up here. And then it pulls back, and I'm like, I don't know, is this going to work? But we did get first pullback and second pullback. And I think the reason this worked better in some ways was because it had made this really big move yesterday, which now kind of proved to us that this is a stock that has the potential to squeeze. This thing can go up 100% in, 20, 30 minutes. So even though there wasn't a fresh catalyst driving the move, I felt like it was worth taking a stab, especially at that VWAP spot, because that's a spot where momentum shifts from the bears to the bulls, right? From bearish to bullish. Again, this did have some inherent weakness. The fact that it had dropped after hours, or not after hours, in the afternoon yesterday, and then pre-market was back below VWAP. But even in spite of that, I kind of was looking at this and thinking, we sort of have some, support sort of right in this area. And depending on how you draw these lines, it feels like there could be some support in here. So for that reason, I was thinking it's worth a stab. And so I took my first trade on that, got in the green right away on the first trade, took second trade, third trade as it moves higher. But then notice how we got into this area here of kind of struggling. We're right in between support at this previous resistance line. So we broke it. We're above it. We come back down. We test it as support. Then we come back up and we're at resistance. We pull back and then we pop through here. And I did take that trade, but with small size. And the reason I took it with small size was because I actually gave back a little profit right in this area. In this area, I thought we were going to push all the way up to 6. And then we flushed. So I lost a little bit there. And then I tried it again right here and I lost again. So when it came back up a third time, I was like, I don't know. And then all of a sudden it's like, boom, 580. So I was like, gosh darn it. All right, well, I'm buying the dip here. And we got that trade up to about 610. And I thought when it held over 6, this is my concern, 200 moving average. So I checked the daily and I'm like, our 200 is right here at $6. Can we break this level? Critical resistance level. And I thought if there's ever a chance that we would break it, it would be right now with this kind of volume, right? Pre-market volume squeezing up. So it was worth a try, but it wasn't able to hold over 6. So then it sells off a bit, and I was kind of like, man, this is tricky. This thing is not easy. And right here it does a jackknife. So it pops up and jams back down, and then bear flags lower. And now I'm like, all right, this thing is not trustworthy. In the first 2 minutes of the open, it dips to 540, it rips to 620, and then it's right back down to 530, 540. So I was like, you know what, man, this thing is wild. I just can't trust it. As we came up towards 10 a.m., 10:30, it tries to break VWAP and flushes back down. Another rejection. And right now you can see it's back up above VWAP. And in some ways, we're not that far off from breaking this pre-market high. So if we do our technical analysis right now, we're going to mark out the high. Well, you should mark the high, but we can mark this pivot here. Now, sorry, back to full screen. Descending resistance, clearly this steep level we broke above that. So we're obviously above that level. I don't know if that's a valid level. I don't usually love crossing price action, like I have to cross it here to connect these two dots. But since it popped but didn't hold that level, it might be valid. We popped, we were below it. I feel like that might be valid. So right now we're getting above it, and we've got ascending support potentially in here. We've got a pivot right here at 581, which we tapped. That was the high of this candle here. And if we get above 581, then we're looking at a move to 623. The only thing I would say is that this is a stock that at this point has already shown us it has a it has a desire to break your heart. It's already given us this trap right here that caused a big flush, had this bull trap right here, that jackknife, and of course the one at the open. So is this going to be one that gives you an afternoon kind of, fireworks display and goes crazy? It's possible. It is possible. The fact that it's holding VWAP is good. You could almost visualize this as a head and shoulders inverted, which would lead towards the move up. The issue for me is that as I look at this type of pattern, I feel like I don't have the risk tolerance to trade it. If I pull up a book map here, you'll see a 20,000 share seller at 6, another one at 590. Now you could see those orders on your level 2 if you have your level 2 open far enough, and you could scroll down and see them. But this is also good to display it up here. So you've got 40,000 shares of sell orders at 590 and 6, and there's another 12,000 shares there at 580. Now at the end of the day, 60,000 shares of sell orders compared to 43 million shares of volume could probably get absorbed fairly easily. Those orders have been there pretty much all day. If we break that level, then it seems like we do have more room up. But I'm just a little, honestly, just for me at this point, trading is not, this is kind of going to sound counterintuitive, but it's not as much about making money as it is about being defensive and managing your risk. You have to manage your risk. That has to be the first thing you're thinking. So if I look at this right now and I'm thinking from the perspective of just making money, I'm going to buy 10,000 shares right here and look for the squeeze through 6 and a possible halt up, right? But if I'm thinking about this from the perspective of risk first, what I'm going to say is this stock, previous price action, has shown pops and drops, right? Now we're seeing up on the level 2, we've got that seller up at 90, which I just saw. The seller's now at, see, a 26,000 share seller at 80. That just came in. That's a new seller that just came up. So it's heavy. And, just like that with 10,000 shares, I could be down 10 cents. And if I have to hit the bid, I might get a couple cents of slippage and I'm, hey, back to break even on the day. Nice work. It's 1 in the afternoon. And now I'm going to feel like I don't want to walk away here break even after being sitting in the green all morning. So maybe you know what, maybe I'll get back in. And the next thing you know, I'm back in and I get caught again. Now I'm down 1,000 and all of a sudden things start to fall apart and they can fall apart really quickly. So, it's not, look, if you're an adult, you guys can do as you'd like. If you like this setup, if you have the risk tolerance to trade it, depending on how much you're up today, you do as you'd like. But for me, the way I look at it is how confident am I that this is going to give me the move I'm looking for? And my confidence goes down when I see these types of rejection candles here and here. And to be honest, my confidence is lower, period, trading in the afternoon, because that's not the time of day I typically do well. That I know that about myself. That's just those are my metrics. So it's you know it comes from my cautiousness on this comes from I think a good healthy place. So if we look at detailed, and I mean this is going to be all time, but we look at days of the week, and you can see it's like I consistently screw up trading in the afternoon. I do well trading in the morning, stocks that have breaking news. And the stocks that have breaking news that are really, really strong are just super strong in the morning. And then in the afternoon, sometimes you'll have ones that are holding up. And if you've got a cushion and the market's really hot, we might get some parabolic momentum and things get exciting. But that's not as common. So what's more common is that in the afternoon, things get choppy. You get faked out. You jump in, then you jump out, then you jump in and jump out. And you start churning shares and getting yourself frustrated. Next thing you know, you've given back your profit from the morning. And because you had that profit for a few hours, you grew somewhat attached to it because you kept thinking, oh, good, I've had a nice day. I've had a nice day. I've been thinking for the last 5 hours that I've had a nice day. Well, 4 hours, whatever it is, doesn't matter. For the last several hours, I've been sitting here thinking, I've had a pretty nice day. 7 a.m., made some money, 7:38. And so to lose all of that in kind of a moment of, just a maybe impulsive trade where you got carried away and, next thing you know, you've made a mistake, I just don't think that's worth it. So that's what I'm risking. I'm not risking just the money. It's not just the money. It's risking the loss of confidence. It's risking the track record. It's risking that state of mind that keeps me so healthy every single day where I can come in, trade aggressively, and do really well. All of that is a lot more valuable than the money. Because when you lose your confidence, then that carries over into the next day, right? And now you have the opportunity cost of, because you weren't as confident, now the next good stock that pops up on Monday, you're going to be a little hesitant on because you just had a red day on Friday because you did something stupid in the afternoon. And that's one of the things that can be really frustrating with trading. So to me, being defensive means sort of carefully keeping myself in a state where I'm always like very close to the top of my game, or always able to be like almost right at the top of my game where I can just be performing at like 100%. And I just know for myself that when I'm in the middle of a deep drawdown, and I haven't, fortunately this year I've done a pretty good job keeping my drawdowns minimal. But I did have a bigger red day in March. Let's see, or maybe it was February. Anyways, it doesn't matter. But I did have a bigger red day, in the earlier part of the year, and that took a second to recover from, and I was pretty disappointed about it. But you know, since then, that also kind of became a catalyst for a little bit of tightening up my risk because I was disappointed with myself that I had made that mistake. You know, look, I can tell you a million times, manage your risk, trade in a sim, set your stops, don't bag hold, don't just, hope it'll go back up. But ultimately, sometimes we have to make those mistakes ourselves to feel that pain. And it's that pain that becomes sort of the motivator to not do that again. And so I had some pain earlier this year and I could just go through, let's see, I'll just do a custom range from January to March, so you could see when that drawdown was. Now I can't remember, but I thought it was in the beginning of March. So apply this. All right, so then we'll click 90 days. Yeah, there it is. So these were two back-to-back red days. This is a $19,000 red day. That was the biggest red day that I'd had in over a year. Was not happy about that. So, you know, that was that happened on March, looks like 11th and 12th. I had two back-to-back red days. And, so it took some time to recover from that. Now, if we go forward here, we go from March to um, May, because I think we can only show 3 months here in this little view. You'll see that I had the $30,000 loss, and then it took me some time to kind of get back, and then finally recovered with a nice hot streak here. A couple big green days, $20,000 day, and then I had two more red days, 2,000 and 6,000. Not as bad, tolerable. Oh, and another one right here. This must have been like 10,000. Another one right here. So, had a couple little drawdowns, but was able to rally back up. And it's actually interesting because this and this almost look the same. So the recovery, the drop, back up, and then pushing higher. Recovery, drop, sort of back up like that. I think it's very common. So, for where I'm at right now, I feel like it's really important for my trading that I keep myself in a state where I'm kind of always ready to step up to the plate, and I'm not in a big emotional drawdown. It makes me a better trader. It also makes me a better teacher, better educator, better mentor for you guys. I try to lead by example as much as I can. So this is something that I'm thinking about a lot. And it might seem at times like I'm under trading. But I think one of the things that gets a lot of beginner traders into trouble is over trading and learning to trade a little bit less and take your profits and not overstay your welcome is an important skill. And it's something that takes time. It's easy to punch those buy and sell buttons, especially when it's commission-free trading. But, eventually I think you'll learn that you may be better off with just a few trades each day. So let's see. So I had one trade on Kit. That was a loser. And then I guess I don't know how many trades I took on MGOL. I probably took, let's see, it looks like I've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Looks like 17 or 18 trades on it. And so I traded it a lot. For all that as much as I traded it, I did make as much as I feel like I should have, which was also part of my reasoning for saying, you know what, this is just not feeling like it's happening, and I got to kind of go with my gut because when something is hot, I'm dialed in and I know it. I don't have to second guess it. I know what's going on. But today was a day where it just felt, not quite strong enough. So, that break of VWAP setup, especially pre-market, can be really powerful as short sellers kind of get caught off guard and all of a sudden you get that swing back up. Got it right here too. This is the first one I traded. But because of the inherent weakness, you have to be careful. And usually it's that first swing that's the strongest. And that's where we want to just see it like not let up. We just want to see it keep going. So once it sort of lets up the first time, it's kind of like now I think the element of surprise is kind of gone. Shorts are going to be a little bit more like, oh, this one's a little tricky. And longs are going to be thinking the same because it keeps going above and below VWAP. So you sort of get one shot at a nice break of VWAP. And we got one on it today, but it wasn't perfect. I see RGC is halted right now. This one's a Chinese stock, very light volume, thinly traded. The problem with this is that although you can certainly look at it on the daily chart and think, this is interesting, over 12, right? It's got room up to 13, 14, maybe higher. What's going to send it to that level? What's the catalyst? What's the news? I got nothing, right? So purely technical, well, does it have high short interest? I sort of doubt it. I mean, you could check, but I sort of doubt it. So, unfortunately, it's hard to trust. And let's look at the volume, RGC. Yeah, so you got 162,000 shares of volume. Now, if this had breaking news, that'd be different. Breaking news would be like, okay, we've got a reason for this thing to be going up right now. But without the breaking news, it's hard to trust. Let's see. So let me just check. Um, so I could check on Ortex just to see what the short interest is, but I don't know. I mean, some of these Chinese stocks can get heavily shorted, so it's not impossible. It's a little higher. But no, it's showing very low. So looks like short interest really, it could just be that there's not a lot of shares available to short. The cost to borrow is high. The utilization is 64%. The ZAPP, this is one that I think has higher short interest. Let's see. But, this one had a move, but now it's kind of come back down a bit. Go here. Let's see. Screening. To give you a list of stocks with high short. So ABIO is still on there. That one right now has the highest short score, but it's been on there for a couple weeks, and the stock hasn't really done much. In fact, they even have some headline today, but it's just nothing's really happening with it. RGC resuming there. So you can see that spread, 25-cent spread right now, 26 cents, then it tightens up, and then, oh my gosh, back to 11.72. Oh, now you've got 70-cent spread. That's when things get scary, right? Just can't, nothing you can do really about that. It's just not tradable. So, I think this is kind of where we're at right now. For those of you guys that are new, I want to sort of reiterate a couple things. This is a time of year when, hey, if we get a couple wild card stocks and we get a couple big moves, you want to try to take some of that profit, lock it up, and put it aside. To me, trading is so much about like preparing for a rainy day. You know, take your profit, be disciplined about paying yourself, put that profit aside, and then just remember that there's going to be a stretch. Maybe it's this week, maybe it's next week, whatever, where things are going to get slow and you're going to need that early profit to tide you over. So you feel like the wind is at your back. You feel like you're in the driver's seat. You don't need to get desperate. And I think that means for a lot of traders, it's always great if you could trade in a retirement account because that is tax free. You don't have to be taking profit out for taxes. You could just be sort of chipping away, adding a little, adding a little, adding a little. And you want to avoid spending too much of your profit if you can, especially early on. I've seen a lot of traders make this mistake where they'll start making money, they'll spend it as soon as it comes in, they're then come up on a stretch where things get slow and their account is going below, the PDT level or going below the minimum of whatever their broker is. And I think that trading from that state of mind of being really tight financially will encourage poor trading habits and behaviors where you get desperate, you start focusing just on the money, you're not focusing on following the process because when the process doesn't work, it can be easy to just abandon it. But there are going to be times where you follow the process like I did every day this week and you come up a little short. And I don't have my total of where I'm at right now in the week, but I'll log in and check. So let's see. I got to export my trades. We have my trader view report. So we're going to do August. That's fine. So we'll see where I'm at for the month of August so far, not including yesterday. So I've got to grab those trades and import them. Lightspeed is a little annoying because you have to wait till the next day to import your trades. So I can't import today's trades until tomorrow. It's kind of annoying, but anyways, it's fine. So let's see. So while that's getting ready, so we'll go to detailed. So sitting at 15,959. but that doesn't include the last 2 days. So let me just import these trades here. I just downloaded them. So I'm going to go import. You always got to tag your account. Make sure you tag it with the right tag that you want to use. For me, I tag it as a IRA account. It's a individual retirement account. Import those trades, refresh it. It'll refresh a couple times. We get all those trades in there. And let's see, refresh one more time. One more time, maybe. Oh no, is that where I finished yesterday? Yeah, maybe that is. Yeah, yesterday was a really small green day. That was, yeah. So anyways, I guess it didn't make that much of a difference. But okay, so 16,400. Profit loss ratio, not great so far. Negative. A couple of bigger losers. Golly, which loss was that? $7,500. Now sometimes BBLG. See, I find this a little annoying because this is grouping trades together. This is grouping, that looks like a trade, that looks like a trade, that looks like a trade. So it's grouped together like 4 trades. I find it annoying when it does that. I don't know why it'll do that sometimes. But if I see that, then let's see, you can do a manual split to split up a trade. The only thing that's hard is you've got to know where to split it. So I'm not going to worry about it right now. It doesn't really matter. But anyways, that's a little annoying because that's going to sort of negatively affect my, it's going to show as one big loser when it's not really. But you can see here, 7-minute average winners, 16-minute average losers. That's because it's grouping all those trades together. Wonder why it's doing that. I don't know. I'll have to see if I can figure that out. But anyways, doesn't matter that much. That's where I'm at so far on the month. So if we look at the month in calendar view, excuse me, we're still at the very beginning of August, right? So this is going to be a $10,000 a week when you add in today's profit. So that's good. $10,000 a week. Last week was 7,000, but only a 2-day week for August. So we still have 3 full weeks for the rest of the month, right? 3 full weeks. So it's just about hitting those base hits, staying grounded, and being comfortable with there might be some no trade days. There might be some days where there's nothing that looks good, and then the next day we have a stock that goes up 200%, 300%. And so I'm going to just be quick to ease off the gas, slow down, and then put the pedal right back to the metal. And the whole time try to keep myself where my account is more or less near at all-time highs. So I'm not in a deep drawdown. So that's kind of what I'm thinking for right now. And so again, for those of you guys that are new, it's a good time to be studying. Don't expect to see back-to-back home runs in August. That's not typically what we get, but it's a good time to study. And I always say if you can make it during a slow market, that's going to set a really strong foundation for when things pick back up. All right, so make sure you study, get yourself ready. And I would say at this point, I'll do my game plan for the week ahead on Sunday. I'll upload that probably Sunday morning, somewhere around Sunday morning. So I'll look at how everything finished today. I'll go through the stocks that I like the most. I'll see if I can put together a watch list for Monday and a little bit of a game plan for the week ahead. And then I also have an upload that I'll publish on Saturday on YouTube. So you guys make sure you are subscribed to the channel so you get the notification when those uploads go live. And I want to thank you as always for tuning in. So I'll remind you, please take it slow, manage your risk, don't overstay your welcome, practice in a sim before you put real money on the line. And I'll see you guys back here bright and early on Monday morning. Okay, see you Monday.